Hi friends, welcome back to Financial Hacker. If you are new to this channel, please subscribe to the channel and click the bell icon for the latest updates. We have already witnessed 9 companies have been listed in the month of March, and out of them 5 issues are closed above the issue price on the listing date and provided decent listing gains to the investors. MTR Technologies is one among the 5 which provided 88% of the listing gains to the investors, followed by Nazara Technologies which provided 43% listing gains to the investors. The other 3 companies are Easy Trip Planners Limited, Lakshmi Organic Industries Limited and Heramba Industries Limited. You can see over here various listing gains provided by them. The first company that will kickstart the IPO wagon in this new financial year is Macrotech Developers Ltd, formerly known as Lodha Developers, on April 17th of this month. The 2500 crore issue will close on April 9th and the company has fixed the price band for the offer at Rs 483 to 486 per share. And this is the third attempt by Mumbai-based firm which is known for luxury projects such as Trump Towers in Mumbai and Grosvenor Square in London to launch an initial public offering. Lodha Group made a listing in 2009 and 2018 but deferred those plans due to unfavorable market conditions. In this video, we will discuss the detailed review of the IPO, whether we should apply or not, IPO details and grey market premium, etc. So kindly watch the full video for better understanding. This is KVN Mahesh and let's get started. Company was incorporated on September 1995 and they are the largest real estate developers in India by residential sales value for the financial years 2014 to 2020. Its core business is residential real estate developments with a focus on affordable and mid-income housing. Currently, they have residential projects in the Mumbai metropolitan region and Pune. Also in 2019, they entered into the development of logistics and industrial parks by a joint venture with ESR Mumbai Pte Limited. Company's brands include Lodha, Casa by Lodha and Crown Lodha Quality Homes for their affordable and mid-income housing projects. Lodha and Lodha Luxury brands for their premium and luxury housing projects. I think Lodha Execulas and Lodha Supremas brands for their office spaces. As of December 2020, company has a track record of 91 completed projects comprising approximately 77.22 million square feet of developable area, of which 59.13 million square feet in affordable and mid-income housing, 12.15 in premium and luxury housing, 5.21 million square feet in office space and 0.74 in retail space. Abhishek Mangal Lodha, Rajendra Lodha, Sambhavant Infra Build Farms Private Limited and Sambhavant Trust are the promoters of the company. They together hold 100% of the issued capital of the company. And also you can see the average cost of acquisition of shares by them over here. Company's 2500 crore IPO will open on April 7th and will close on 9th of this month. The face value of the equity share is 10 rupees. And the company will utilize the issue proceeds for repaying debts, acquisition of land or land development rights and balance for general corporate purpose. As of December, consolidated aggregated outstanding borrowings of the company stood at 18,662 crores. This issue will help to reduce their outstanding indebtedness and assist them in maintaining a favorable debt equity ratio, which will enable them to raise further resources at a competitive rate. The company has fixed the price band at Rs 483 to 486 per share, and investors can bid for a minimum of 1 lot comprising 30 equity shares and in multiples thereafter, translating to a minimum investment of 14,580 rupees. A retail investors can apply maximum of 13 lots, that is 390 shares with an investment of 1,89,540. Also, the company has set the subscription limits as not more than 50% to QIBs and a minimum of 15 and 35% for non-institutional investors and retail investors respectively. Also, shares worth 30 crores have been reserved for eligible employees. The allotment will take place on 16th April and refunds to those who fail to get the allotments will begin 19th of this month. While the credit of shares into the demat account of the lucky bidders will take place on 20th of this month. Post allotment, shares will be listed on both Bombay Stock Exchange and National Stock Exchange tentatively on 22nd of this month. Post issue, promoters will hold 88.5% of the equity share capital of the company. Axis Capital, JP Morgan India and Kotak Mahindra Capital Company are the global coordinators and book running lead managers to the issue. Also, ICICI Securities, Edelweiss Financial Services, IIFL Securities, JM Financial, S Securities India, SBI Capital Markets and BOB Capital Markets are the book running lead managers to the public issue. And Link India Private Limited is the registrar to the issue. On the financial performance front, revenue from operations has been decreased from 13,527 crores in 2018 to 12,442 crore in 2020. And it has reported 2,950 crore for the period ended December 2020 compared with 9,273 crores a year ago. This reduction in revenue is mainly due to COVID-19 pandemic. If you see here, even though the revenue has been increased from 11,907 crores to 12,442 crore in 2020, the profit has been decreased from 1,644 crores to 745 crores in 2020, which is almost 55% reduction in profits. This is mainly due to high interest and depreciation costs in 2020. Also for the period ended December 2020, net loss stood at 264 crore compared to a profit of 503 crores for the same period in December 19. This is mainly due to reduction in revenues due to COVID-19 and also increased finance cost compared with 2019 around 232 crores in the period ended December 20. However, they are able to maintain a stable EBITDA margins around 30% for all the 3 years. Its EPS for the financial year 20 is 18.46 and last 3 years average EPS is rupees 30.52. For 9 months ended December 20, company has incurred losses, hence EPS is negative. On the face of the financials, company seems to be fundamentally weak. Reasons for the same might be COVID-19 impact and high finance cost incurred by the company. If you see, I have already mentioned, as on December 2020, their outstanding debt was 18,662 crores, which is resulting in debt equity ratio of 4.35, which is very high. Normally, ideal debt equity ratio is around 2 only. Macrotech developers can be compared with listed peers like Brigade Developers, DLF, Godrej Properties, Oberoi Realty, Prestige Estates Projects, Soba and Centec Realty. For the financial year ended March 2020, EPS of the company is 18.46 per share and return on net worth is 17.8%. Also, net assets value per share of this company is 103.86 per share. Among the listed peers, only Soba Limited has the lowest PE ratio of 15.12, while Godrej Properties Limited has the highest PE of 135.51 times. At Rs 486, that is the upper price band limit of the issue, the PE of the company based on financial year 2020 EPS will be 26.3 times as against industry composite PE of 42.14. From this, we can say that issue is reasonably priced based on comparison with the listed peers. However, considering financial year 21 earnings, we cannot say whether the issue is underpriced or overpriced, as company has incurred losses. The real estate market in India has grown at a compounded annual growth rate of 10% from USD 50 billion in 2008 to USD 120 billion in 2017, and also it is expected to further grow at a CAGR of 17.7% to reach USD 1 trillion by 2030. The real estate market has contributed approximately 6% of the India's GDP in 2017 and is likely to contribute approximately 13% to India's GDP by 2025. In last 3 to 4 years, real estate sector in India has witnessed several changes because of demonetization, the liquidity crisis and the implementation of RERA and GST Acts. Despite the COVID-19 pressure across the country, the Indian residential sector made a significant comeback in Q4 2020. And coming to average sales price of residential units, in MMR it is almost double when compared with top 7 markets in India. You can see the past and future estimates over here. And also with a share of 24% of total supply by units, 32% of total absorption by units and 46% of total absorption by value, in the top 7 Indian markets, the MMR was the top performer in overall residential activity in 2020. Indian residential real estate market is dominated by a few pan-India and branded players and multiple local players. Among them, the top 5 developers in terms of highest cumulative sales from 2014 to 2020 are Lodha Group, Godrej Properties Limited, Prestige Estates Projects Limited, Soba Limited, and DLF Limited. While Prestige Estates Projects primarily operates in South India, Lodha Group has majority of its projects in West India. DLF Limited, Godrej Properties Limited, and Soba Limited have a pan-India presence with approximately 500 billion of cumulative sales and 57 million square feet of area delivered over 2014 to 2020. Lodha Group is one of the largest real estate developers in India by residential sales and area delivered. You can see over here. Also, the total sales in Mumbai metropolitan region during 2020 were 44,323 units, of which Lodha Group covered 4,475 units, which is approximately 10% of the market share, that is largest in MMR. Some of the positives and strengths of this company are: it is one of the largest residential real estate developers in India with highly diversified portfolio across price points and micro markets in MMR with a focus on affordable and mid-income housing. Also, it has a strong sales distribution network across India as well as NRI markets, that is in UK, Singapore and US. It has strong project execution capabilities. As of December, it has completed 91 projects. It has well-established brand with ability to sell at premium pricing. And also, it has an experienced management team. These are some positives we need to consider. Geographically concentrated real estate development activities in and around the Mumbai metropolitan region. As of December 2020, 35 of the 36 ongoing projects are in MMR. Consequently, they are exposed to risks from economic, regulatory and other changes as well as natural disasters in MMR, which in turn may have adverse effect on their business, results of operations, cash flow and financial condition. Also, the company's revenues are fluctuating and on declining mode. For 9 months ended December 20, its revenue has fallen to almost 1/4 of financial year 2020 revenues. COVID-19 impact is very high in real estate business. We could see that these company revenues have also fallen drastically. There are sustained outstanding civil, criminal and tax proceedings against the company and its subsidiaries. Unable to defend the same will lead to payment of around 7,753 crores, which will definitely have an adverse effect on business prospects, financial condition and reputation of the company. Incurred significant indebtedness. Company has substantial amount of debt which could affect its ability to obtain future finance or pursue growth strategy. As of December 2020, the company has outstanding debt amounting to 18,662 crores. Company has certain contingent liabilities which, if materialized, may adversely affect the results of operation, financial condition and cash flows. You can see over here the contingent liabilities of the company. After the completion of the issue, company's promoters along with their promoters group will continue to collectively hold substantial shareholding, that is 88.5% in the company, which will allow them to influence the outcome of the matters submitted to the shareholders for their approval. There is very limited information available about Macrotech Developers Grey Market Premium. It was mentioned that they are trading at premium of 25 to 30 per share. However, IPO investors feel that these are just rumors and there is no real grey market premium for the company. The current sentiment and the IPO market in India have been very positive for all the investors for the last 2 quarters. As I have already mentioned, five companies which are listed in the month of March showed positive listing gains. On a closing note, here are the key points to be considered before subscribing to the issue. Based on the company's financial data, the issue appears reasonably priced compared to the listed peers. Also, Mumbai's real estate market is ever growing and will continue to grow. And after RERA Act, organized players have an upper hand in urban real estate development. Company's revenues are fluctuating and on declining mode in the last 3 years and 9 months. Compared with the recent IPO grey market premiums, Macrotech Developers Grey Market Premium is very low, and also due to the second wave of the COVID-19, immediate future of this industry appears dull. I would personally like to avoid this IPO as of now. Only risk-savvy investors may consider parking their hard-earned money at their own risk. We strongly advise you to make proper research before making any significant investment decisions. So friends, what do you think about this IPO? Macrotech Developers is good or bad? Are you willing to invest? Do mention in the comments box. If you like our IPO analysis, please share it with your friends and family. And also don't forget to subscribe to the channel Financial Hacker and click the bell icon for the latest updates. Thank you guys. See you.